NAFCON is live. Share your key takeaways from the session on social media. Let's spread the knowledge. Technology is the fuel driving the NBFC sector forward, and who better to enlighten us than our keynote speaker. Please welcome to the stage Mr. Jiji Mammen, Executive Director and CEO, Sa-Dhan, as he shares his thoughts on unleashing the potential of technology in NBFCs. Come on, everybody, let's give him a huge round of applause.
Good morning to all. Ladies and gentlemen, it's my proud privilege to be part of this 19th NAFCON's event. In fact, for me, I have been associated with this for the last 2 years, and I have attended at least some 3-4 of such events of B2B. And it's always a pleasure to be here, and whenever I'm here, I feel a little energized and charged, because I find a lot of youngsters moving around, technology guys around. So it's a good experience for me to be here. And as you know, I am representing Sa-Dhan. I am CEO of Sa-Dhan. Sa-Dhan is an association of microfinance institutions, and it's also a self-regulatory organization recognized by Reserve Bank of India for microfinance institutions. So as an association of microfinance institutions, NBFC, MFIs, we have been part of this B2B events for quite a long time now. So it's always a good experience, as I said, to be here and addressing to you. NBFCs have created a space for itself in our financial landscape. If you see, almost 22 to 25% of the total credit is provided by the non-banking finance institutions. So NBFCs are a major player, and they are going to be here, and they are going to be there with a larger role. The main advantage for an NBFC is that it is quite, I would say, they are more agile, tech-savvy, and more innovative in type. Unlike a bank, which is more of it's a big institution, moving them, it's slightly difficult. An institution like State Bank of India, of course, State Bank of India, and all become much more tech-driven now. They have all become much more technology-oriented. But I'm sure an NBFC can do much more because of its smaller size or lesser kind of bureaucratic structure. It can do much more better than any other financial institution, any other banking institution. That's the reason why NBFCs are able to penetrate into the Indian financial landscape very, very fast. And technology, with technology as a backbone, NBFCs are able to do much better than many other financial institutions. Every day we find the technology is getting updated, it's getting innovated, and with each passing day, you get something new and something fresh, which can make financing look more exciting. We are in a stage when NBFCs are, or I would say even the financial sector is passing through a little troubled time, especially the NBFCs, I would say. And especially the sector which I am representing, the microfinance sector, it has been going through some troubled time in the past few months. See, in spite of all the developments which has happened, we are still not able to crack some of the things which are really critical for the growth of this sector. That is what it has happened this time also. If you see, after the COVID impact was over, when the microfinance sector or the NBFCs were not able to perform to the best, after that COVID was over, they found things were much supportive and it's quite favorable. And the institutions took advantage of that, started lending in a much bigger way. And ultimately, after 2 years, we are reached in a stage where there has become a over leverage of credit. That means the credit has gone beyond what was required. And in the process, you're finding a stress in the sector. How has it happened? See, in microfinance sector, if you see, in 2022, Reserve Bank of India came up with a new regulatory framework, a revised regulatory framework, where a lot of freedom was given to the institutions to decide their lending policies, to decide about their interest rates, decide about the appraisal mechanism or the assessing the household income. All these things were, that freedom was given to the institutions. But then, of course, it's not that they can just use it the way they want. There has to be a proper mechanism for that. A board-approved policy has to be there, and that board has to review it on a regular basis. And of course, the Reserve Bank of India, being a regulator, always been having a oversight of what is happening. In spite of that, we found that the freedom which was given to the institution, the NBFCs or the NBFC MFIs, was not fully respected, I would say, or the freedom was maybe a bit over leveraged. And in the process, you found that you are reached in a stage there, the lending has happened in such a way that many of the borrowers have got more than what they could take, what they were eligible to take, and ultimately resulting in a kind of a stress. So here probably the technology has a role to play. See, there are two pillars in the microfinance sector if you see in the new revised regulatory framework. One is about the assessment of the household income, another is about the assessment of the credit liability of a person. What the regulatory framework says, it says that any household with less than 3 lakh annual income who is given a non-collateral loan or a unsecured loan is a microfinance loan. But then it also stipulated that the not more than 50% of the monthly income of the household should be used for the payment of the dues, the liabilities, or the total EMI for a household should not exceed more than 50% of its annual income, its monthly income. So these are the two pillars on which the whole revised framework rests. And I think we failed in assessing both. Assessing the credit liability as well as assessing the income of the household. When you're not able to do either of them, it totally goes against the principles of the new regulatory framework and results in a kind of the kind of a stress which we have been seeing. So here probably the technology should play a role, because we know that we are dealing with, most of us are dealing with the informal households. A household who do not have the proper income documents. It's only they all have income which are more of informal in nature, not a regular one. So in such a situation, how do we assess the income of a household? Can the newer technology like AI, ML and all can play a role in this? This is probably what, the people who are from the technology background or who are in the technology companies should be thinking about. Can you bring some kind of a solution to this? How do we assess income of a household which is not which is in the informal sector, which do not have proper documents to show the income? Is there any way of doing that? Is there any way of assessing by seeing the household of the person? Is there any way of assessing the income by seeing the assets held by the household? The kind of land and other kind of the assets which they have? Probably it is possible. I'm sure, I'm hopeful about that. Maybe if not today, it's going to come, because that is how we can move forward. That is the only way we can move forward. Similarly, the credit assessment, how much liability a person has, that is also an important thing. Of course, to some extent, we have a credit bureau which gives you some kind of a data, but it is not complete. That's a major problem. That credit bureau data is not complete because it captures only the data of the regulated entities. And which are the regulated entities? Regulated entities are the banks, NBFCs or SFBs or regional rural banks. But what about the other kind of lending which takes place? There are so many other players in the market. That is another problem which we are facing. So these are the two areas. Probably there has to be some kind of a solution, and I'm sure and I hope that the technology will come to the help of the people and the institutions and will help us to move forward in the right direction. This this conclave, I'm sure, when we are talking about the potential of the technology, we should be also be discussing some of these aspects, and we should also be looking at how do we take care of the welfare of the people for whom we are working for, the clients for whom we are working for. How do we ensure that they are not getting into any kind of a trouble? Because money is something which everybody is in need. You offer money, everyone will be ready to take it. But how much they should take, whether they have the capacity to pay it back, that is something one should be mindful of. Then only you can go forward with a right kind of a lending, the credit culture. So I'm sure the people sitting here would also be looking into these kind of aspects. So with this, I stop here. Because I'm sure you got a long list of speakers. You have got several discussions, panel discussions. All this going to have a very quite engaging day for you. I wish all the best to this event, and also all the best to the speakers and the participants who are here. And I hope that by the end of the day, you'll all be going back with much more enlightened and enriched. So my best wishes to all of you. Thank you so much, and thank you, Anu, for bringing me here. Thank you very much. All the best.
Thank you so much for your wise words, sir. And as a token of respect, recognition, and heartfelt gratitude, would like to present this memento. And for that, I would like to call upon Mr. Vaibhav Kumar, UP, the founder of Media B2B TFM. Please be here on the stage. Please come a little forward. A round of applause for this memento session, please. Thank you so much.